Okay, good morning. Welcome back. Let's get into the stock market technical analysis. It's Fed day today, guys, and the market is pricing in a 75 basis point rate hike. So we're going to look at what the charts are, kind of how they're set up now, and then we'll look at, maybe how to play that after the Fed comes out. So if you guys are finding value in the content, I do ask that you drop me a thumbs up. It's a small channel. Our channel doesn't grow a lot. It's small, but I have a lot of very actively engaged users, and that's because the content that I continue to put out is actionable opportunities, trade ideas, chart analysis, market analysis. A lot of the, what I try not to do is just give you guys hindsight analysis where I tell you what the market did. A lot of the channels that I've noticed on YouTube, they just tell you what the market did and then go over a couple, technical indicators and then move on, and that's it. They're not giving you actual trade ideas, how to actually play the trade, things like that. So if you guys are finding value in that kind of content, drop me a thumbs up. Additionally, I do have a course. It is a technical analysis course, not per se, not really a trading course. I'm not giving you a day trading course, but what I am giving you is the, breaking out the skill set that's needed to read the charts, to find trade setups, to manage risk, and just to really pinpoint the opportunities for yourself in the chart. So if you're interested, link in the description below. That's priced affordable. I kept the price very affordable. I don't give my time away for free, but at the same time, I didn't want to price it so that it's gouging people. So check that out if you're interested. Also, the private member group finally is available for anybody that's interested in additional market insights from me, additional trade ideas, and we typically do a Saturday live stream where I go through any charts that you want me to look at, and that's for members only. Link in the description below on that one. I will not be doing a Saturday live stream this Saturday, though, because I'm going to be out of town. Okay, we're through all that. Let's get into the setup. So triple Qs, you can see tech. The big thing, and I'm not going to go into a lot of detail, but because I went through a lot of detail yesterday on this, you'll see basically we've got bullish divergence here on the daily, on the RSI. We do not have it on the PPO. And then when I go down to the hourly, bullish divergence on both the RSI and the PPO. Okay, so the last divergent low was really right here. Now we have the potential for a bear flag, okay, and I pointed out the levels to watch if we get that big sell-off. So go back and watch my video from yesterday, and I talk about, the potential targets on how to play the Fed. What we're expecting is a 75 basis point hike from out of the Fed. If we get a 1% hike, it's most likely going to be bearish because the market's really pricing in a 75 basis point hike, so that's going to be more hawkish. So we should see some selling after that. Of course, if they do a 1% hike and then come out and say they're going to be data dependent, and there's not going to be hikes in the future till they kind of a wait and see message, then the market could see that as bullish. But likely we would sell off in between the press conference and the rate announcement, and then maybe recover after the press conference. So that's something to look for. If they do a 75 basis point hike, I suspect the market's not going to do too much, at least on the initial rate announcement, but they will likely try to set their message tone in the press conference after that. So it's usually not so, that's basically the highest probability scenario is they do the 75 basis point hike, and then in the press conference, they're going to set the message. Is the message a wait and see, or is it a hawkish message? That's really what the market is looking for. So here's what I'm going to be looking for. Obviously, triple Qs is a way to play this. For either a rally or a breakdown. I don't know which way it's going to go. Nobody knows which way it's going to go. I need to see what the Fed says. But when I look at TLT, the bonds, not TLT, well, you can look at TLT or TNX. Really, TNX is the interest rates. Here's an hourly chart. You can see the interest rates since about August 2nd have just been marching higher. Pretty clean trend line here. So if we get a break of trend, that's going to be a sell signal on interest rates. That means interest rates are likely going to start to come down. That if we see that, then that should signal that rates are coming down And that should be bullish for tech, and it should be bullish for gold, okay? So that's something to look for on TNX. TLT is another way to look at it. This is the actual bonds. So if you see a rally here, then that would be same situation. This is just the inverse of the TNX. You know, rates and bond prices are kind of the inverse of each other. So if you rally in TLT, that should be bullish for tech and be bullish for gold. And look, you've got bullish divergence on the hourly, all right, on TLT. When I go to the daily, you've got bullish divergence on the daily, all right? See it right there? So bullish setup for sure in bonds. They can rally if that's what is going to happen. The setup's there. And then going back to TNX, the interest rates, when I look at the hourly, you have, you know, negative divergence here, okay? And then on the daily, should be pretty much the inverse, but there you go, negative divergence on the daily showing up. So in general, you know, it's set up for interest rates to fall, okay? That's how the market's at least set up. If we don't see that and we burn through all these divergences, then, you know, we've got bigger issues going on. I suspect that, you know, market participants are they know that the Fed can't hike too much more, and they know it's the highest probability that the Fed is going to hike. Obviously, this hike, that's priced in, I believe, but then start to walk back, be a little more data dependent, and say, we're going to wait and see. We've done a lot of hiking, and in the future, we're going to wait and see. So the way I'm going to be likely trying to trade it, just because given the setup that I have this morning, is most likely with gold. Okay, and so here's gold bullion. We'll look at this in two different ways. Gold here, 1680 is about the support level. I've talked about that as a key level. So let's just zoom in at kind of where we're at now. You can see basically just trading below that level. Not going down though, and we have bullish divergence. So I think it's very likely we see an impulsive rally today after the Fed, and we break back above that 1680, and this is going to be a bear trap. And if that happens, we should have a pretty impulsive rally in gold and the gold miners. Okay, sorry, I had to do a call. I'm not exactly sure where I left off, but we'll continue here on gold. So we are below 1680, clear level, clear reaction level. Lots of reactions along that level here. Okay, on the daily chart, we have bullish divergence. So in general, it is set up to go higher. Now, maybe we run down and make a new divergent low. If I go to the hourly chart here on gold, you can see that, you know, we're kind of, we don't really have a trend to follow, but we're just kind of chopping around below that 1680 level. Looks like stop rate action to me, and I could see us impulsively just spiking, boom, back above that 1680. So I'll be watching for that and looking to play that if we see it. Different ways to play it. Obviously, you have your gold miners. Let's look at GDX. So GDX on the daily chart. You've got bullish divergence really started a while ago. I've got it kind of marked right here. So this is all, I mean, for the most part, this is all divergent low price action. So each new low in price has been divergent low, meaning you have momentum that has been moving higher while prices are moving lower. A little bit of a bullish falling wedge, breakout, back test, and we're just chopping sideways. So we could have the catalyst today to start, you know, an impulsive rally. If I look at the hourly chart here, we'll see on the hourly, sorry guys, got to pause the video real quick. Okay, on the hourly chart here for the GDX, which is the, you know, really the large cap mining, gold mining stocks, you can see that we've been building bullish divergence for a while, but, you know, nothing. We haven't made a new divergent low, so it's possible they spike down, make a new low down here below the 23 area. All right, come down, make a new low, keep your bullish divergence. But again, I'm not so sure. If I look at the daily, you can see bullish divergence here on the daily, obviously, for both momentum indicators. So that was our last divergent low right here. We could spike down and make a new one. I have a feeling we're going to rally on the Fed today. I'll be looking for that. I'm not going to jump in early, but I'll definitely look for a rally in gold and gold miners. To help confirm that, guys, I'll be looking again at the bond yields, see if we're breaking those trend lines. And then the dollar, another bit kind of key area here that we really want to see. You can see the dollar's spiking up today, making a new divergent high. To see price action like this right ahead of the Fed tells me that it's a fake out move. It's just usually when you see moves like breakouts or new highs, things like that, right ahead of a big market move, market event, it's usually going to be a fake out. So I suspect they're going to sell down the dollar after the Fed. We have negative divergence. It's on both momentum indicators on the daily chart. So we'll see. The dollar could move down to the trend and still hold trend. We could break. All right. For me, the break of trend is going to be key, at least for a sustainable gold rally. So we need to see that. Here's a trade idea. Again, it's just a setup, and everything's going to depend on the Fed. And I know my chart's a big mess. What I want you to focus in on is this key level right here at 17 or 73.75. Okay. On the daily chart here of AMD, you can see 3 reactions there of support. There's another couple, and there's another one, and there's another one. All right. And where are we at right now? Pretty much right at that level. So that's it. You're at the level. If I go down to the hourly, you can see at this level, we have bullish divergence. Okay. So the chart says it should bounce here after the Fed. That's what the chart says. So if you see this thing break down and actually start to break that level of about 73.75, and we start to take out the divergences where you have impulsive selling and all of a sudden you make a new lower low in the momentum, kind of dip down and make a new low and burn through these divergences, that's extremely bearish. If that happens, I don't know if it's going to, but if it does, on the daily chart, your target should be right down here at about $59, $59.20, somewhere right in there. That's a thin zone. You can see back here in July of 2020, we pretty much spiked right through that zone. Let me zoom in there just to show you guys that. And you can see we pretty much just spiked right through. Hardly any trading there, a couple gaps, just right through. If you enter that gap again, you enter this zone, you should roll down to the very bottom of that zone. And I see that at about 59.20. So you can see that's former resistance. Should be decent support right there. So I'll be watching for that. If you get an impulsive breakdown in AMD, the sell signal in my mind comes on, a decently impulsive break below this 73.75. You'll know it when you see it. The selling should be strong and it should be pretty relentless. And we should, just continue right down to about $59. That's a drop of, from the entry down to of about 20%. So very, very possible there. If that happens, it's likely, and I'll wrap up with triple Qs. If that happens, it's very likely that triple Qs, as I zoom in, basically rejects here, sells down, burns through the bullish divergence that it has on the hourly, and marches straight down to our final target right now of about 238, 240. I've been talking about this level for a long time. I do think it's coming. I do think we're going to hit it. Do we get a bounce here first, or do we just drop and plunge right down to that level? Okay, you need to be able to be flexible. Obviously, the market's set up. It could go either way. It's definitely set up, I think, to rally. But if you burn through these divergences that are pretty much across the board, and it's going to be very bearish, and it's really going to set the market up for a crash. All right, and by crash, I mean a pretty swift drop right down to this 238 level. From where we're at now, it's a move of about 16, maybe a little bit more than that. Let's mark it out, about 19 or 18%. And I think that could come in a matter of just a couple days, maybe 3-4 days, 5 days, you could be down 18% in the triple Qs. That's a crash. So let's just see what happens with the Fed, guys. I'm going to go ahead and wrap up and catch you guys on the next one. Bye.